Welcome back to Economic Edge USA, where we break down complex economics into simple insights you can actually use. Picture this. You're at Target buying a new phone case, some clothes for work, and picking up your prescription. What you don't realize is that every item in your car has a price tag influenced by what happened in Washington's trade meetings with China and India last month. Today we're connecting the dots between geopolitical events and your personal finances. I'll show you exactly how tariffs and trade policies translate into real dollars coming out of your pocket, and more importantly, how to prepare for these changes before they hit. This is educational content to help you understand these economic forces, not personalized financial advice. Let's get started. Section 1. Tariffs, the economic foundation. Let's start with the basics. A tariff is a tax that American companies pay when they import goods from other countries. Think of it as a customs fee. Here's the key principle. Businesses don't absorb costs, they pass them along. Simple example. A phone component costs $100 from China. Add a 25% tariff, and the American company now pays $125. That extra $25 gets built into the price you pay at the store. This is basic economics. When input costs rise, output prices follow. The question isn't whether consumers pay for tariffs, it's how much and how quickly. Understanding this foundation helps you predict which products will get more expensive when you hear trade policy news. Now let's look at real-world examples. Section 2. The China trade impact. China represents about 18% of all US imports, touching nearly every spending category in your budget. Electronics. The electronics impact hits immediately. Smartphones rose $100 to $250. Laptops jumped $150 to $400. Home electronics like TVs and gaming consoles climbed 15 to 20%. Real example, the PlayStation 5's launch price factored in tariff costs. Without tariffs, it likely would have launched at $450 instead of $500. Clothing, your wardrobe feels it too. Clothing prices rose 10 to 15%. Athletic wear increased significantly. Even socks, underwear, and t-shirts cost more. Home improvement. Planning to renovate or fix something. Power tools increased 20 to 30%. Hardware and basic supplies rose 15 to 25%. Appliances like washers, dryers, and refrigerators jumped by hundreds of dollars. Markets. Financial markets react instantly to trade news. Apple stock dropped 3 to 5% on tariff announcements. Retail stocks like Target and Walmart faced pressure. The consumer discretionary sector became volatile. Your 401k felt every trade war headline. Economic indicator to watch. When you see US-China trade talks in the news, expect market volatility within 24 hours. Section 3. The India factor. India's impact is quieter, but it hits hard, especially in healthcare. Generic medications. India produces 40% of America's generic medications. When trade tensions rise, drug prices can climb 10 to 20%. That means if you take 3 generics at $25 each, a 15% increase costs you an extra $135 per year. IT services. India also dominates IT services. Higher outsourcing costs mean more expensive apps, higher banking fees, and customer service delays. When US-India service trade faces restrictions, companies scramble for alternatives. Transition costs are enormous. Service quality often drops temporarily. And eventually, all costs reach consumers. Unlike China's product tariffs, India's service disruptions create long-term cost increases that stick for years. Section 4. Financial market ripple effects. Your investments feel it too. Technology stocks react to China. Healthcare stocks react to India. Consumer goods face margin pressure from both. Industrial stocks like Boeing and Caterpillar absorb supply chain costs. Currency and bonds shift as investors chase safety. Mortgage rates too can move with trade-driven inflation. And your local economy? Manufacturing states, service economies, port cities, and farms all experience different pressures. This is why diversification matters in investing. Trade policies affect different sectors differently. Section 5. Your personal financial strategy. Now let's make this practical. When trade tensions rise, watch these budgets. Electronics, healthcare, clothing, and home projects. Plan a 15 to 25% buffer for electronics. Budget extra for prescriptions. Add 20% cushion for renovations. Smart timing helps too. Buy electronics before tariff dates. Stock up on medications early. And finish projects during calm trade periods. And always keep an emergency fund bigger during uncertain times. Conclusion and AMP. Wrap up. Here's your takeaway. Geopolitical events aren't distant, they're previews of your future expenses. Key principles. Tariff costs flow to consumers. Supply chain disruptions raise prices. Markets react instantly. Global economics impact local budgets. Action items. Follow trade news. Understand your supply chains. Track economic indicators. Build your knowledge. Remember, this is educational content, not financial advice. Always consult qualified professionals for your specific financial decisions. Subscribe and hit the notification bell so you never miss these economic updates.